meaningful price activity. Commodities in focus. I mentioned some of the metals selling off, but Manisha is joining us with what is top of mind for her right now. Manisha, hi, morning.
Morning, Prashant. Thank you for that. Well, yes, metals are under pressure as we start Asia today, and so is the energy pack. Overall, if you look at the crude oil prices itself, we are down by 4.5% in this week itself. So we have been making lower lows, especially when it comes to the crude oil prices. After that good start to the year, we actually have seen constant declines here. I want to put on board on what we have seen as a high and low already in the first 40 days of this year. So while we started the first week of Jan with nearly $88 a barrel, we've slipped down to $78. That has been the low, and currently we're trading at 82. So somewhere in the middle, actually on the lower side of the range, is how the crude prices are trading with. A lot of factors, but I want to start with the dollar index because there has been a smart rebound onto this one. From a 9-month lows, we've seen the US dollar index gain up, and this is after the Bank of England and ECB hiked interest rates by 50 basis points. So their respective currencies declined and gave some strength to the US dollar index there. The second important factor is the buildup in the US inventories, and that we've seen happen for a 6th straight week. Markets were anticipating maybe a 500,000 barrel of a jump up in sense of inventories, but we saw more than 4 million barrels happen into last week itself. And now when you look at last 6 weeks in totality, 34.5 million barrels have been added to the US inventories, and not just crude. It's a similar scenario for gasoline, heating oil, natural gas. All of those inventories are much higher when you compare it to the last year. The US crude inventories itself are the highest since June 2021 now. The gasoline inventories have risen by 13 million barrels already in 2023. So the overall crude and crude products, all of that has seen an increase in inventories. The OPEC and allies meeting came and went, and they've decided to keep the output steady. So no big news from there. We did see December output increase, but the January output has been much as per the agreement that OPEC really had put out. And the markets will watch out now for the uncertainty where China really seems to be throwing up in sense of demand. While we have seen the loading numbers for December and Jan positive, but will Feb sustain is what the street will watch out for. And then it also has been about the Russian sanctions. European Union is all set to put a price cap on Russian refined products from 5th of Feb. So ahead of that, there's a lot of jitteriness into these markets as well. This is a report card of what we've done in this week until now. So as I told you, 4.5% of decline for the Brent prices. Even deeper, sharper cuts is what we've seen for natural gas, heating oil, and coal as well has started this year by nearly 30% of a decline coming in. So overall energy pack in the negative right now.
Okay, all right, Manisha. Got that. Thanks very much for the update there on the way the commodity universe is